Inflation has scored some serious blows with the average consumer in the last year. The Bureau of Labor Statistics came out with a report at the beginning of July showing that consumer prices are up 9.1% over the last year, pointing out this was the largest 12-month increase since the 12-month period ending November of 1981. I was well over a decade from even being born then. This 9.1% increase in consumer prices means the average family spending about $5,000 every month in expenses is having to shell out almost an extra $500 per month just to maintain their current level of living. You tell me how that works with a lower 5.7% increase in wage growth and almost $6,000 in revolving credit card debt. The answer is it doesn't work, not without making some changes. Today I'm breaking down some actual practical changes that you can make so that you can survive the inflation onslaught on your personal finances. Let's get into it. But first, this video is brought to you as a paid sponsorship of Buddy, a super simple budgeting app designed with you in mind. More on them later. Possibly the most important type of inflation-proof budget advice I can give is to create a zero-based budget. A zero-based budget is where all of your income equals your expenses and savings. The reason I start with a zero-based budget is that's what will balance your income with your spending. Inflation causes an increase in the cost of certain items, especially nowadays you're talking groceries, fuel, and heating costs. Well, when these costs go up, something has to eat those costs. Having a zero-based budget will help you with that, because having a zero-based budget as the end goal means you'll have to adjust other line items in order to make up for the inflationary costs. Unfortunately, nowadays it might be from your savings budget line, but you may be able to find a different line to make up for that inflationary expense. Speaking of finding a place in the budget, number 2 is reduce discretionary expenses. Seriously, this is one of the best possible ways to fight inflation, because this will allow you to actually make room for the increase in groceries, fuel, and heating and cooling costs. Though I'm wearing a sweater, we're definitely not cooling our house right now. One thing I encourage everyone to do is to create a needs versus wants list, and then go back and look through the list multiple times, modifying it as you go, because we as humans frequently see our discretionary expenses as necessary ones. Just looking at mine and my wife's budget, there are multiple things I can see that we would qualify as discretionary expenses, like our blow funds that we can use for literally anything we want, or our Amazon Prime account, or our home decor fund.
Hey, that's necessary.
See, that's the perfect example of a discretionary expense that feels necessary. The point is, take your needs versus wants list and reduce those discretionary expenses. Number 3, get those insurance policies evaluated and have an insurance broker take care of that for you. Because unless you're an insurance nerd, they're going to be able to find the best deals and compare the benefits and explain it to you so you can make an informed decision. I don't know about you, but I hate dealing with insurance. Way too confusing. It was enough of a headache just trying to explain the difference between term life and whole life insurance for a video on this channel. So if someone else can handle it for me, I'm on board. Number 4, regular expense tracking is vital for making good budgeting decisions, because it's only when you have your expenses tracked that you know exactly how much you have to spend in the month. Unless of course you're using the envelope system to budget your way through the month. Then all you have to do is open up an envelope and look. Gosh, I could have sworn I had more money left in the month for chocolate milk. Tracking expenses isn't fun, but you won't regret it. It'll reduce your financial stress immensely, because making purchases doesn't have to be a, do I have enough money to pay for this? Instead, it can be a, I am confident I don't have enough money to pay for this. It's intended as a joke, but if that's actually the case for you, maybe that'll help you choose to nix that purchase before you have regrets later. Speaking of regular expense tracking, our video sponsor Buddy Budgets will actually remind you every day to put in your daily expenses at the end of the day, which makes the daily expense tracking a little bit easier. I've made a full review video of Buddy in the past, as well as one where I'm comparing it to 7 other budget apps in this video right here. What I found is Buddy is one of the cleanest budget apps in terms of its setup. It's already got the most common expense categories set up, so all you have to do is add numbers, whether it's your income or your expected expenses. You can also create savings goals with their own funds, and it's free to use. They also have a premium version which has a very reasonable monthly, annual, or one-time fee. And this provides extra benefits, especially if you budget with a spouse or if you find the need to create more than one budget. But the free version is going to be perfect to try and maybe perfect for what you need in a budget. Overall, Buddy is a very user-friendly budgeting app, and I would highly recommend it if you're looking for a budget app to try out. Number 5, pay off those consumer debts. Before you hit your savings hard, hit your debts harder, because interest rates are going up. And unless you have a fixed rate loan, you'll be paying extra in interest as inflation hits your budget. Mostly though, the faster you can get your debts paid off, the more cash you can put towards those inflationary expenses. You can use the debt avalanche or the debt snowball method. I personally recommend the debt snowball method because it'll help you build that momentum that you need to kick debt for good. And of course, I'm not going to pretend like it's easy, but one of the best ways to kick that debt faster is by taking on some overtime or maybe a part-time job in addition to your normal job. I'm not making this a separate point because the goal is to help you fight inflation without massively changing your day-to-day life. But the truth is, maybe it's time to increase your income to help with your debt and other expenses. Number 6 is automate your money, especially the savings part. Listen, it's so easy to reduce this during inflationary times, but half the battle is a mental one. Back when I changed jobs earlier this year, I experienced this mental battle firsthand. Because with my new job, I couldn't sign up for a retirement account for the first 60 days of my job. And while I was automatically saving 15% of every paycheck into my 401k at my old job, I wasn't doing that at my new job because I didn't have access to one. But what I did have access to was my Roth IRA. And while I could transfer 15% of my new income into my Roth IRA until I got access to a 401k, I didn't, not for the first month at least. I told Bailey, I was like, holy cow, it's really hard to transfer that 15% over to my IRA because I keep thinking we could use that extra money for other savings and expenses. Well, when you automatically save for retirement or for an emergency fund or whatever, it takes that mental game out of your head. You don't have to think about it. You don't have to force yourself to do it. It just happens. And right now, one of the best possible ways to fight inflation is to increase your savings, because inflation is the act of losing buying power with the money that you have. For example, you can't buy as much fuel for $10 now as you could a year ago. So when you save and invest, the interest rates help you lose less buying power than you might otherwise, and will help set you up for a better future. But I'd recommend you knock out that consumer debt before you hit your savings really hard, unless you're just getting a starter emergency fund in place. Number 7 is take those inflationary expenses and evaluate them to see what you can possibly do to decrease the amount that you need of each expense. You can change the thermostat by a degree or two. Carpool to activities so you can save on that precious fuel. Buy generic instead of name brand items at the grocery store. Meal plan. Turn off lights. I think light needs to be on for this video. Get chickens to provide some eggs, although they are going to take a while to start providing eggs. Let's grow, ladies. These things may not make a massive difference, but they will add up. And more importantly, I think these things will change your mental game so that it actually flows into other areas of your finances, helping you change your habits overall, which will impact your money more than turning off a single light would. Let me know in the comments down below if you have any inflation-proof budget hacks yourself. And if you found any value in this video, then I'd greatly appreciate a like and a subscribe, because it really helps my channel. And check out this video next if you want to see me compare 8 different budgeting apps, including Buddy. And we'll see you in the next video.